In the great theater of the financial markets, the general averages tell the story of the tide. They show whether the broad market is rising or falling, providing a crucial guide to the overall trend. For the average investor, this is often the beginning and the end of their analysis. But for the professional speculator, the averages are merely the backdrop. True, life-altering fortunes are not made by capturing the average move of the market. They are made by identifying and trading the exceptional performers, the stocks that possess a life and will of their own. These are what William Delbert Gann sought throughout his career: the independent movers and the true market leaders. These are the stocks that rally faster and further than their peers in a bull market, and hold up stronger or decline the least in a bear market. The secret to exceptional profits, he taught, lies not in following the herd, but in developing the scientific skill to identify these leaders before the public recognizes their strength. This is a guide to that method. Before we continue, please subscribe and leave a quick comment, even one word. This small action helps the algorithm show this video to more people and tells me these deep dives are worth making. To understand how to find the market's true leaders, one must first understand the traps that ensnare the majority of traders. The most common of these is the deceptive allure of low-priced stocks. The novice trader is naturally drawn to a stock trading at $5 or $10 per share, believing it to be cheaper and to have greater potential for a percentage gain than a stock trading at $100. This is a fundamental and often disastrous misunderstanding of market dynamics. William Delbert Gann was unequivocal in his warnings against this approach. He wrote, "A study of past history proves that buying low-priced stocks often ties up capital for a long period of time. This is the first great problem with trading laggards, the opportunity cost. While your capital is sitting dormant in a low-priced inactive stock for months or even years, the true market leaders are making their great advances." William Delbert Gann noted, "Many low-priced stocks have held in a narrow trading for 5-10 years or more before they started to advance or to decline. A trader who buys such a stock is not investing. He is warehousing his capital in a non-performing asset. Even if he does not lose money, he loses his most valuable asset, time." The psychological toll is equally damaging. He wrote, "You wait, and if you do not lose money, you lose your patience, and when your patience is exhausted in advance of the start, you get out. The frustration of watching other stocks advance while yours remains stagnant often causes the trader to capitulate at the worst possible moment, frequently just before the stock finally does begin its move. The public buys and holds these low-priced stocks, hoping they will eventually follow the high-priced leaders. But William Delbert Gann warned that hope will not put these low-priced stocks up. There is usually a very good reason why a stock is selling at a low price. And that reason is often fundamental weakness or a complete lack of interest from informed professional operators. He stated that in the modern market, the investment trusts and the people with large amounts of money for investment buy into the strong companies, where the earnings are good and the dividend prospects are good. They buy stocks like General Motors or DuPont, not the so-called cats and dogs. The professionals' method, therefore, is the exact opposite of the amateurs. He taught, "The best way to make money is to take higher-priced stocks and buy them after they have broken into new high ground and show activity. The secret is to buy strength, not apparent cheapness." The second crucial philosophy a trader must adopt is that market leadership is not static. It is a dynamic, ever-evolving process. The stocks and industries that lead one great bull market are rarely the ones that lead the next. The professional trader must be a student of economic progress, always looking forward to identify the changing of the guard. In Truth of the Stock Tape, William Delbert Gann outlined this historical progression. Many years ago, traction and railroad stocks were the leaders. Then followed the copper boom. After that, the motors, rubbers, and oil stocks became the leaders. He understood that fortunes are made by recognizing these great shifts in economic emphasis. The trader who was still trying to trade the railroad stocks as leaders in 1919, when the age of the automobile and oil was dawning, was doomed to mediocre returns, while the trader who recognized the shift and focused on motors and oils was positioned to make a fortune. This is why William Delbert Gann insisted that a professional must always be on the lookout for new industries and growth stocks. He was not a value investor in the traditional sense of buying old, established, slow-moving companies. He was a growth-oriented speculator who understood that the greatest profits come from innovation and change. In his 1954 course, Speculation, a Profitable Profession, he gave a remarkable example of this forward-looking analysis. At the dawn of the atomic age, he instructed his students, "When considering what stocks to buy in the future, you must make up charts and study the companies which are producing uranium and are developing atomic energy machinery for commercial purposes." He even listed specific companies to watch, such as Bendix Aviation, DuPont, General Dynamics, General Electric, and Vanadium Corporation. This is the method in practice. It is not about chasing tips. It is about identifying the next great economic engine. The lesson is timeless. The professional of today must apply the same logic. He must ask himself, what are the new industries of our time? What new inventions and discoveries are set to revolutionize business and create the leaders of the next great bull market? The secret to finding the independent movers lies in this forward-looking mindset. You must discard the laggards of the past and have the knowledge and courage to identify and invest in the leaders of the future. Having established the foundational philosophy of market leadership, the critical importance of focusing on the strong over the weak, the new over the old, and the leaders over the laggards, we now move from the why to the how. A philosophy is of little value without a practical mechanical method for its application. How precisely does a trader identify these independent movers and true market leaders before they have completed their great advances? William Delbert Gann did not rely on intuition or guesswork. He developed a clear, systematic method for identifying strength based on the recorded facts of the market. This method is a study in relative strength, chart analysis, and the unwavering discipline to act only on definite, confirmed indications. This is the mechanical process for finding the stocks that will lead the next great market campaign. The core of William Delbert Gann's method for stock selection is a practical application of the principle of relative strength. This is not a complex mathematical formula, but a direct visual comparison of a stock's performance against its peers and against the general market. He taught that, in studying the different groups of stocks, you should watch the position of each individual stock to see which one is in position to lead and advance or decline. The process begins by analyzing the stock market groups. In any given market, some groups of stocks will be declining while others are advancing. The first step is to identify the groups that are showing the greatest strength. Once the leading group has been identified, the analysis narrows to the individual stocks within that group. The true leader, the one destined for the greatest advance, will reveal itself through its behavior, especially during periods of market weakness. The ultimate litmus test is this. The leading stock is the one that declines the least during a general market correction and is the first to rally and make new highs when the market turns up. The logic behind this is impeccable. A stock that refuses to decline while its peers and the general market are selling off is demonstrating immense underlying strength. This behavior is a clear sign that the stock is under accumulation by strong, informed interests. The insiders, or the composite man, are using the market's weakness as an opportunity to absorb every share that is offered for sale. Their persistent buying creates a powerful floor under the stock, preventing it from declining. When the general market pressure finally subsides, this stock, now having been passed from weak to strong hands and with little overhead supply, is in the perfect position to lead the next advance. It will rally first, move fastest, and advance furthest precisely because the preparatory work of accumulation was completed, while other stocks were still in a state of liquidation. The ability to compare a stock's action to the averages and its group is therefore the first mechanical step in identifying a potential market leader. This principle of relative strength creates a distinct and recognizable signature on a stock's price chart. William Delbert Gann taught his students to look for two primary chart formations that served as definite mechanical indications that a stock was a true leader and an independent mover. Signature number 1. Making higher bottoms in a bear market. This is one of the most powerful and reliable signals of a future market leader. While the general market averages and the majority of other stocks are plumbing new depths during a bear market or a major correction, the future leader will defy the trend and begin to establish a pattern of progressive or higher bottoms. This is the market's own testimony that the stock's primary trend has changed, even while the rest of the market is still in decline. In Truth of the Stock Tape, William Delbert Gann provides a masterclass in this type of analysis using the example of Studebaker during the 1920 to 1921 bear market. In the final panic of December 1920, Studebaker made a low of 37 3/4. Many other motor stocks made their lows at the same time. However, as the market continued to experience further weakness into the spring and summer of 1921, a crucial divergence occurred. While the general list of motor stocks followed the averages down to new low levels, Studebaker refused to break. Its final low in August 1921 was at 65. This was the definite indication. While its peers were losing ground, Studebaker held a bottom that was 27 points higher than its low from the previous year. William Delbert Gann wrote, "This was a plain indication that Studebaker was receiving strong support. Otherwise, it could not gain 27 points while others were losing. This pattern of higher bottoms during a period of general market weakness is the clearest possible sign that a stock is being aggressively accumulated by informed interests who know its true value and its future prospects. It is the signature of a stock that is gathering force for a major independent move. The trader who patiently waits for this signal is positioning himself alongside the smart money just before the markup phase begins." Signature number 2, crossing major old highs. The second and ultimate confirmation of an independent mover is the breakout above a major multi-year high. A stock that has been dormant, trading in a wide and prolonged range for several years, has built up an enormous cause. The longer the period of preparation, whether it be accumulation at low levels or reaccumulation at high levels, the more powerful the subsequent move will be. When that stock finally generates enough force to break out above the highs that have capped it for years, it is one of the most powerful buy signals in all of technical analysis. William Delbert Gann provides a perfect example of this in his analysis of Citi's service in 45 years in Wall Street. He details the stock's history. 1938 high 11, 1939 low 4, 1942 low. 2. High 321 inches. For a period of more than 4 years, the stock was in a state of deep depression and public neglect, trading in a range between 11 and 2. Then the character of the stock began to change. William Delbert Gann wrote, "In 1943, the stock crossed 11, the 1938 high, after a period of 5 years which indicated much higher prices, and you should have bought it at once." This was the definite signal. The stock had absorbed all the overhead supply that had been created during the previous 5 years and was now moving into a technical vacuum, a new territory with little to no overhead resistance. This breakout was the final confirmation that the long period of accumulation was complete and that a major independent bull market in the stock was underway. The result speaks for itself. After breaking out above its 5-year high at $11, Citi's service began a relentless advance that culminated at a high of 6,421 in June 1948. The trader who had the patience and the knowledge to wait for this single, powerful chart signal was rewarded with a 500% gain. This is the power of identifying and acting upon the breakout of an independent mover. To apply these strategic rules with a master's precision, you must learn to grasp the dynamics behind every price movement. William Delbert Gann's Truth of the Stock Tape is the foundational guide for this skill. It's not a book of theory. It's a practical course that teaches you to understand the real-time contest between buyers and sellers, recognize the critical phases of accumulation and distribution, and assess a trend's true strength. This edition is a faithful reproduction of the 1923 original. We decided to include the historical charts from that 100-year-old publication. While many are nearly unreadable, we felt it was important to include them for historical context. The true timeless value, however, lies in Gann's text. For any serious student ready to understand the market's real intent, this book is an essential resource. Get your copy via the link in this video's description. Having established the mechanical methods for identifying a potential market leader through its chart signature, its ability to make higher bottoms in a bear market and to break out above major old highs, we now advance to the application of this knowledge through professional trading strategies. Identifying a leader is one thing. Extracting the maximum profit from that knowledge is another. William Delbert Gann was not just a theoretical analyst. He was a master speculator who employed advanced tactics to capitalize on the divergences he identified in the market. Furthermore, his analysis was not confined to the present. He was a profound student of history and innovation, always looking toward the horizon to identify the great economic shifts that would create the leaders of the future. This final section delves into these advanced strategies and the forward-looking mindset required to become a true master of market leadership. One of the most powerful and sophisticated strategies employed by William Delbert Gann was the technique of simultaneously buying a confirmed market leader and selling short a confirmed laggard. This is a professional strategy that aims to profit not just from the direction of the general market, but from the relative divergence between the strongest and weakest stocks. He understood that in any market there are cross-currents, where some stocks are advancing while others are declining. This strategy is designed to capitalize directly on these disparities in strength. The logic is sound and multifaceted. First, it is a pure play on relative strength. You are making a direct bet that the strong stock will outperform the weak one. Second, it can act as a partial hedge against general market risk. If the entire market were to decline unexpectedly, the profits on your short position in the weak stock would help to offset the losses on your long position in the strong stock. The primary profit driver is the widening of the spread between the two instruments. In his writings, William Delbert Gann provided detailed, practical examples of this strategy in action. In Speculation, a Profitable Profession, he analyzed a hypothetical trade comparing vanadium steel, a leader, and Studebaker, a laggard. In early 1953, both stocks were trading at similar price levels. Vanadium was showing signs of accumulation and strength, while Studebaker was exhibiting clear signs of distribution and weakness. A trader following this strategy would have bought vanadium and sold Studebaker short. By April 1954, just over a year later, vanadium had soared to nearly $60 a share, while Studebaker had collapsed to $15 a share. The initial 4-point spread between them had widened to a massive 45 points in just 7 months' time. He wrote, "This proves that it pays to buy the stocks in strong position and sell the ones in weak position, which indicates main trend down." He provided another clear example with Douglas Aircraft versus Celanese. In July 1951, both stocks were trading around the same level, near $50. An analysis of their chart structures would have clearly identified Douglas as a leader in a strong group, Aircrafts, and Celanese as a laggard showing profound weakness. A trader who bought 100 shares of Douglas and sold short 100 shares of Celanese would have witnessed a dramatic divergence. By April 1954, Douglas Aircraft had soared to $130 for a profit of 72 points, while Celanese had plunged to $16 for a profit of 34 points on the short sale. The combined profit on the two trades would have been over $10,600 on an initial capital of around $5,200, a return of more than 100% in under 3 years. This is the power of a strategy that profits not just from a rising or falling tide, but from the ability to identify the fastest swimming ship and the one that is sinking. The ultimate form of market leadership comes from companies that are at the forefront of new revolutionary industries. While identifying relative strength in existing groups is a powerful tactic, William Delbert Gann taught that the greatest fortunes are made by those who have the foresight to identify the stocks of the future before they become public favorites. This requires the trader to be more than just a tape reader. He must be a student of progress, innovation, and economic change. He wrote in Truth of the Stock Tape, "In future, you must watch for the new industries that develop and get into their stocks, just the same as the people who let rails alone and got into motors and made a fortune." His method was to look for the new discoveries and inventions that would fundamentally reshape the business landscape and create entirely new categories of wealth. This was not an abstract philosophy. He gave concrete, real-world examples. Writing in the early 1950s, at the dawn of the atomic age, he provided his students with a clear directive. In Speculation, a Profitable Profession, he stated, "When considering what stocks to buy in the future, you must make up charts and study the companies which are producing uranium and are developing atomic energy machinery for commercial purposes." He went on to list specific companies that he had identified as potential leaders in this new field, including Babcock and Wilcox, Bendix Aviation, DuPont, General Dynamics, General Electric, and Vanadium Corp. This is the method in its most forward-looking form. The timeless lesson is not to buy uranium stocks today, but to apply the process that William Delbert Gann used. The professional speculator must always be asking, what is the atomic energy or the automobile of our current era? What new technology is emerging that will disrupt old industries and create new giants? By identifying these powerful macro trends and then applying his charting techniques to find the strongest companies within those new industries, the trader positions himself at the very beginning of the next great wave of market leadership. The selection of market leaders and independent movers, according to the methodology of William Delbert Gann, is not a matter of intuition, tips, or luck. It is a scientific method based on comparison, historical analysis, and a forward-looking perspective. It begins with the foundational understanding that one must abandon the weak, low-priced laggards that trap the capital and patience of the amateur public. It requires the recognition that market leadership is dynamic and that the greatest opportunities lie in the new things, the emerging industries that will shape the future. The mechanical process involves a rigorous analysis of the charts to find the definite signatures of strength, the stock that makes higher bottoms while the market makes lower lows, and the stock that generates enough power to break out above its major multi-year highs. This knowledge can then be applied through advanced strategies, such as buying the identified leader while simultaneously selling short the identified laggard, to profit from their inevitable divergence. Ultimately, this entire approach allows the trader to elevate his practice. He moves from being a passive follower of the averages to an active professional operator who scientifically selects the most powerful instruments the market has to offer. This is the key to unlocking exceptional returns and the final step in the journey of making speculation a profitable profession.